You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
In today's show, you're going to be hearing from Matt Geiger of MJG Capital. He's a successful younger fund manager in the sector, and his website is mjgcapital.com. Matt, thanks for coming back on the show today.
Thanks for having me, Bill. And it's fun to do this new video format. Glad to be back with you.
Yes, thank you. All right, let's review your fund's performance in 2020. We touch base about every 6 months. How did your fund perform this past year?
We had a great year. I'm sure many of your listeners did as well that are involved in this space. But I'm happy to say we had our best year since the fund's inception, all the way back in 2011. We were up 113% net of fees. Which compared quite well to both the TSXV and the S&P over the past year. I should also note that just in the past 6 months of the year, we were up over 100%, which is also a record for a 6 month period for the fund. And then I should note that our 5-year numbers are looking pretty great. I think we're up 600% over the past 5 years. And that compares to roughly 80, I have the numbers here, 84% for the S&P and 67% for the TSXV. And so I'm pleased with the performance. Of course, it feels good. There's a temptation to get cocky, but really these years, or after these types of years, that's when you want to be more cautious and almost a little bit more nervous as an investor. And so I'm really taking 2021 in stride. I hear a lot of exuberance and bullishness for the new year. And so I'm trying to go into the new year with a level head. And I think your listeners would be best advised to do the same.
Yeah, and I want to get into next year, but a couple more questions on how you managed your portfolio last year. Did you have some outsized gains in a few stocks, or were your wins kind of spread evenly throughout the portfolio?
Good question. It was actually outsized gains from a few names. I think on a previous interview that we did maybe in the fall, I'd mentioned the Nova royalty as one of our positions. And that was far and away the best performer of the past 6 months. That's a company, for those that aren't aware. It's a startup royalty company focused exclusively on nickel and copper. So it has a very clean, I think, sexy narrative in order to take advantage of this upcoming electrification trend that we're seeing around the world. It originally was a bet purely on people. We made the investment in late 2018 at a $4 million pre-money valuation. So it was really at the ground floor. I think in dollars and cents perspective, it was at 25 cents with a half warrant at 40 cents. So it was quite early. And the reason we did it is because Brett Heath was involved. And it was the people involved and the valuation, the business model and the narrative all worked for me. And so obviously that position, I think it's trading close to $4.30 at the moment. Has absolutely the performance has exceeded my expectations. But that was a large driver of performance. Global Atomic is another name that worked quite well for us. We participated in their last placement, and then also fortunately added on the open market in early November, really right before the run we saw. That was less about uranium and more about the zinc price, which I saw had jumped close to $1.30, and I knew that would mean that Global Atomic's operation in Turkey would be printing cash. So that was another good one. And then one more name I'd say that provided outsized gains would be Kennerland Minerals. That's Zach Flood's company that actually, to my knowledge, is going public tomorrow under the ticker KLD on the venture exchange. And that was another bet on people. We made that one more recently at the beginning of 2020 at an $8 million pre-money valuation, I believe. Zach's he's a younger guy, but a very sharp geologist, an honest guy, and also quite good with capital markets. And also he's has some very good backers and people that I respect. And so that one has quadrupled, I believe, in terms of valuation since our initial investment due to the discovery they made at their Frotet project up in Quebec with Sumitomo. So sorry to go through these names you asked, but those are kind of the three that came to mind that help power the portfolio higher.
A name you brought to my attention last year was Norden Crown Metals Corp. We did the placement, and they're also a show sponsor. Why did your fund invest in this company?
Yeah, I still very much like Norden Crown. As you mentioned, we both participated in the placement. I believe it was back in August, maybe September. It was at 5.5 cents. Came with a full warrant at 11 cents. That's a company I've actually been following since inception. I should note that placement was the first time they'd ever offered a full warrant along with the deal, and it was also the cheapest price that they'd done a deal. When they first came out of the gates, I believe it was a 35-cent company. So the valuation has been hit. For those that got involved early, it's not been a big winner for them, admittedly. This was that said, I like a lot of aspects of the story. The first would be the involvement of EMX, which is a longtime fund holding or for the MJG fund, and really high quality royalty company out there. With the ability to organically generate their own royalties and incredible geological expertise. So they're 13% owners of Norden Crown, and also originally staked the properties. The two main ones would be Gumsberg in Sweden, and then Bjurford in Norway. And EMX staked these properties during the bear market. So when things were ugly in 2014, 2015, 2016, these assets wouldn't be around today if they started from scratch now. And they basically chose the management team for Norden Crown, put these assets into the company. And you have discovery upside, a $10 million valuation at the moment. It's actually the only $10 million company in the MJG portfolio right now, which maybe speaks to where we are in the market cycle, because we've seen quite a bit of performance over the past 6 months. But they're cashed up, and we have two exciting catalysts coming up here. They're in the midst of drilling their 100% owned Gumsberg project, and we should see 3,500 meters. I think it was 16 drill holes over the next couple months. Hopefully, first assays coming out in February or early March. And then meanwhile, up their Bjurford project, which is a copper gold IOCG system, they have Boliden, which is Scandinavia's marquee miner, earning in for 51% stake for $6 million US. And while the rigs aren't turning, to my knowledge, as we speak, that could change any week now. So I like the fact that we'll get two full drill programs worth of results without Norden Crown having to come back for capital. So this one's quite speculative, but a name that I'm quite excited about, and we still hold our full position from the placement.
Fury Gold Mines is a Canada-focused exploration and development company committed to aggressively growing its scalable, high-grade gold assets with major drill campaigns planned across its 3.5 million-ounce portfolio. Fury is led by a management team of proven explorers and developers with a track record of success in advancing and financing project development. Fury Gold Mines is well-positioned to create value for investors with low-risk development growth and the potential for a new major discovery. Fury Gold Mines trades on the TSX and NYSE American under the ticker FURY. To learn more, go to furygoldmines.com. That's furygoldmines.com. You alluded to some concerns for next year. Talk to us about the key macro trends that you're observing for 2021 and how that might affect us as resource investors.
Sure. Well, I would say more optimistically in the resource space, I really do feel this energy metal, this green metal, this electrification narrative is just getting going here. And it really started, at least amongst generalists, with the talk we saw from Elon Musk, kind of late summer, early fall. But now there's been multiple, Tesla quarterly conference calls in a row where he's basically pounded the table saying that Tesla badly wants sustainable, environmentally friendly nickel supply, and he's willing to pay top dollar for any company out there that's able to supply that. So I think that really, perked up a lot of investors that don't generally follow the mining space all too closely. And then more recently, you have Chamath from Social Capital. I'm not going to try to pronounce his last name, but he's very well respected in Silicon Valley. And just over the past year or two has become, a very loud voice on CNBC and has quite a bit of followers. And he too, just over the past 6 weeks has been tweeting pretty relentlessly about his excitement about investing in the metals that are going into solutions for climate change. And so that would cover the whole gamut, in my opinion, whether it's, copper or nickel or cobalt or lithium, vanadium. He's put money specifically in rare earth metals. He was behind the SPAC. I think it's now called MP Materials, but that's taken the Mountain Pass rare earth project back into production. So it's interesting to see those that have never been involved with mining in their entire life turning their attention to the green metals, to the energy metals. So that's on the positive side. That said, in terms of macro trends or the biggest risk I see for next year, it's the broader market. I'm getting quite concerned personally, just seeing the speculative activity that's out there, but both within the junior resource space, but also more broadly, the froth in the crypto markets, for instance. The fact that Tesla is up multiples of its share price that it was at the beginning of 2020. Just a week ago, and some of your listeners may have come across this. Jeremy Grantham came out with a pretty concerning piece. He's somebody I respect very much. He's a statistician. He's seen quite a few market cycles. I think he's in his 80s, and he founded GMO. And he was successfully able to call the Japanese bubble in the late 80s, early 90s, the dot-com bubble of the late 90s, early 2000s, and then the great financial crisis in 2008. Now, I should say as a caveat, he was a bit early on the Japan front and the dot-com front. He did get the timing on the great financial crisis pretty spot on. But the gist of his paper is that we are in a full-fledged market bubble. This is an absolute anomaly. And he said straight up, he doesn't expect it to last beyond late spring or the summer. So it is just one man's opinion. That said, he does have a pretty strong track record. And yeah, based on my anecdotal observations, I kind of agree where he's coming from. So it's a weird position to be in, especially for investors like me and you who have followed the junior mining market closely. Like, we have a very good decade ahead of us, 4 to 5 years, 10 years. We have a very good decade ahead of us. Like, the pendulum has a whole lot farther to swing back towards hard assets. That said, there's nothing stopping us from losing 40 to 50% of our portfolio in short order if we see a large sell-off in the broader markets. And so I'm trying to keep both aspects in mind, that yes, we're in a good space and we need to be patient, but also, yes, there could be turbulence outside of our niche of the market that filters in, and we could get hit pretty hard, similar to how we did in March. So that's also why I'm urging caution for those that are particularly excited about where we're at in the space.
And a larger cash position in your portfolio?
So you'll see in the investor letter, which I haven't sent out yet. I sent all the results to our limited partners. Letter should be out later this week, maybe over the weekend. We're at roughly 5% cash, which is quite a bit, which is low. Going into December, we were at 10% cash, but then we exercised 2 different warrant positions, and so that brought it down to 5%. But yes, as we head into the spring and into the summer, I could definitely see us getting closer to 20-25% cash, just out of conservatism. It's not easy to do, especially when all your holdings are rocking, and it's painful from an opportunity cost perspective. But just doing the thought experiments in our head, we were up 113% in 2020. If we'd been at 30% cash for the entire year, we'd still be up 80% in 2020. And so, I don't want to get overly greedy. If I'm a bit early and a bit too conservative and we have a very similar year to what we did last year, then yeah, I'll leave a little bit of money on the table, but we'll still be rocking from a return perspective. So I'm trying to not get too greedy.
Your foundational investors, if I recall, they were locked up for 10 years. Aren't you kind of approaching that 10-year anti-lockup period where they get to access their cash if they want? How are you handling that as a fund manager?
You're right, Bill. So the key point is that it's an open-ended fund. And so we're at about 30 limited partners at current. We started with 7, I believe, or 8, including myself. And so, yes, those original 7, their lockup ends, I believe, September of this year. So it's coming up. That said, we've had close to 24 other investors come in the year since, and I'm expecting some significant inflows, particularly at the end of this month and at the end of February, when I'm able to get the results out and kind of talk to some people that have been interested in investing. So yeah, from a portfolio management perspective, that's not causing me much issue at all, because of the partners that may be withdrawing money later this year. It's a very small percentage of the overall AUM. But yeah, from their perspective, we'll see how the portfolio is doing by the time the 10-year lockup hits. If we're having another 2020 like year, I would happily go to the partners and say, hey, why don't you take half of your money off the table and you can play with the house's money now. You've been patient, and take it, invest it where you see fit, or spend it on yourself and leave a little bit more, and let's let this thing continue to run. So that's kind of how I'm thinking about things. But that's the least of my concerns at the moment.
Regarding 2021, one more question. How are you looking at the different commodities? And when we talked in the past, I think it might have been 2 interviews ago, you were 50% at least in the precious metals in terms of the breakdown in your portfolio. What are you percentage-wise in the precious metals equities right now? And what, other than precious metals, what equity are you most bullish? What commodity are you most bullish on?
Right. So I think you're right at the percentages of when we last talked. I will say, especially until the past few months, when we started to see some of the energy metals and battery metals run. And that's when we saw Nova's royalty start to outperform, Global Atomic to start to outperform. I'd say in August, we were close to 75% weighted towards gold and silver, which is higher than it's ever been since the fund's inception. Even without much selling, just because of outperformance now from the other metals within the portfolio relative to precious metals, it is very close to 50% gold and silver weighted, about 40% what I'd consider the energy metals, and that would be primarily copper, uranium, some nickel, some vanadium, and a little bit of rare earth exposure, and then the remainder split between agricultural minerals, industrial minerals, and cash. So that's kind of where we're at the moment, and I'll highlight that in the upcoming investor letter. I also, I always say this caveat. I think it's important to say, especially if you're focused in the junior space, you'd be much better served as an investor to focus as a bottom-up stock picker. And so from my perspective, I really try not to get caught up in the fluctuations of the given commodities, trying to pick the next hot metal. I'm much more focused on backing high-quality management teams at reasonable valuations, focusing on high-quality projects that should work at current spot prices. And so, if there's a great team that I know well and have made money before we're with, and they're working on a good asset, and I can get in relatively early, and they're focused on, say, a gold project, and I'm not particularly hot on gold for whatever reason at that moment, I'm not going to turn down the investment just for that perspective. So I think I really want to make that clear. That said, in terms of the metals, that if this kind of euphoric sentiment continues in the market, I'd name a couple of the battery metals that have yet to really run. So I think potentially vanadium. I think there's a good narrative there. Especially for
and what would be driving that? That's used for large storage, right? Electricity. So what would drive that? Like the charging stations for the EV revolution? Is that how you would see that, the use for that?
Well, the funny thing is, for the foreseeable future here, for years, the vanadium market really is contingent on steel, on the steel industry as an additive. And so I think in some ways it's almost a misconception. Like if you're betting on vanadium right now, you're betting more on the steel market than you are on batteries' future. That said, the narrative is pretty sexy, and so we could get to the point where we start seeing the speculative attention that we saw in the last vanadium run up, I believe in the 2017 era, and vanadium got up to close to $35 a pound during its last speculative flurry of attention. I think we're down to $5 or $6 per pound at the moment. So I think that's a metal that you could see move, and then cobalt as well is another one. The cobalt narrative's really been hurt in recent years by kind of the coming realization that battery makers are transitioning from the typical cathode that would be, say, 1/3 cobalt, 1/3 nickel, 1/3 manganese, to now very rich nickel rich cathodes at the expense of both of those other two metals. There are quite a few reasons for that, but it's happening. So I think that's kind of rained on cobalt's parade. That said, I'm not anticipating battery makers ever being able to get cobalt out of their batteries entirely. Maybe I shouldn't say ever, but at least in the next 10 or 15 years. And so I still think cobalt is an important metal in the mix for the electrification's future. And we haven't seen the same speculative attention paid to it over the past year that we have, say, copper or nickel.
Matt, your website,
or uranium for that matter.
Yes. Matt, your website is mjgcapital.com. If someone wants to get in contact with you, would that be the best means?
Yep, that works. There's a contact page right there. That can also reach out by email. My email is matt@mjgcapital.com. And especially if somebody wants to get on the distribution list ahead of the investor letter, feel free to reach out. Also, if you want to talk any of these holdings or about the sector generally, I'm always happy to do that. Love talking shop.
All right. And I'll put Matt's website, the link in the show notes, so you can click that if you're listening in audio or on YouTube. Matt, really appreciate you coming on the show today. Thank you.
Thanks, Bill. It's been fun.